Welcome back to another video. We're going to talk about what happens when the market pulls back. Do you buy the dip? Do you sell the dip? And how to look at it. So here's the thing. There is no right answer, but it's more complicated than that. So let's say, hypothetically speaking, you bought a stock right here when this particular stock, in this case it's Tesla, but it could be anything. It's up here. It was 361 bucks a share. And then you wait a couple of weeks, maybe a month, and now it's down to 245. It pulled back. Do you buy more to average down? Or do you sell it because it's in a downward trend? So here's the thing. This is the difference between investing and trading, right? If you are an investor, that means you plan to hold the stock for a long time. You have done research on the company. You know the company. You like the company. You believe that in 5-10 years from now, this company is going to be much more successful than it is today. Then you want to accumulate shares, which means every time the market dips, you want to buy a little bit more so you can accumulate your shares at a discount. If you are trading, that means you don't care if this company is good or bad. You don't have any plans to hold it long term. In that case, you want to sell the trend. It's in a downward trend. The stock is heading down. You want to sell it. So to drive the point home a little bit more, let's look at Warren Buffett and how he has acquired Apple, for example, right? Warren Buffett is an investor. When he buys a company, it means he has researched it and he is going to hold that stock for years and years, and he's going to slowly accumulate more and more of it because he believes in the company. So in this chart here, this one takes a look at Apple. Warren Buffett has one of the largest positions in Apple in the world. 40% of his portfolio is Apple. It's Warren Buffett's largest holding right now. Warren owns $132 billion of Apple stock. Right? He's not buying this today and selling it tomorrow. He started buying here. Every green bar here is a buy that he has historically purchased. So it started in February 2016. But this is the real key, right? Apple here topped out at about 180 bucks a share in January of 2022. And then it went in a downtrend, right? So Apple has been in a downtrend pretty much for about the first 6 months of 2022. Clearly. Moving down from about $180 a share to 140 bucks a share, and Warren kept buying, right? This is a clear example of him believing in the company, long-term investing outlook. So he's buying those shares even though it's in a downtrend. That's the investing mindset. If you are a trader, and again, there's nothing wrong with trading or invest. I'm not saying one is better than the other. If you are a trader, then I recommend this book, Best Loser Wins, by Tom Hougaard. I just read this book recently. It's absolutely fantastic. Tom Hougaard has won numerous trading competitions. He is a full-time trader. You can see here, he turned about $30,000 into $1.3 million, not through investing, not because he did research in companies, but just because he looks at charts and he follows the trend, right? The real way to look at it is wait till you establish the trend. Okay, it's heading in a downtrend. Then sell the downtrend and keep going until it goes down. When the trend reverses and you can actually see a clear uptrend, then you buy it because it's going up, right? So he says, don't get emotional. Don't get attached to a stock. If you're a trader, just look at the charts and follow the trend. If the trend is going up, you keep buying. If the trend is going down, you keep selling. This is why if someone says, oh, there's a dip, should I buy the dip? It all depends on, are you an investor? Are you a trader? Did you do research on the company? Do you plan to hold this stock long term? Or do you want to just basically hold it for a few days or weeks or months and then get rid of it as soon as you make your 5-10% return? So that's the answer there, and that's the way to look at it. All right. Again, this is not investing advice. I don't recommend any of the stocks that you see here. I just pulled this up as an example. So I don't recommend Tesla. Don't buy it. Don't sell it. This is not what this video is about. Same thing with Apple. I have no opinion in Apple. I don't own Apple. So again, this is not about whether you should buy or sell these particular stocks. This is just the idea, what happens when the market dips, and should you buy the dip or should you not buy the dip? All right. And hey, check out this book. It's really good. All right. Thanks. Bye.